I actually landed my first internship with Citi, worked in the markets domain. It was complete mad 2 months of internship. I totally enjoyed that time. The scenes that you see in movies, a lot of screens and the phones are ringing and people are just yelling and being mad from 9 a.m. till 3 p.m. It was all real and it was really, really interesting. That's where my fascination for finance and investments began. In either case, I think there should be a good mix of two. You should not 100% just invest in equity or 100% invest in
It's all about asset allocation. What do you think is the most perfect allocation, say, for a 30-year-old?
You want the percentage?
Yes, let's do the percentage.
If it was me, I would do 80% equity, 20% debt.
Absolutely.
In most cases, it's not very easy to liquidate bonds, especially if it's not a listed bond.
Hello and welcome back to another episode of House of Equentis, where we dissect complex financial matters with prominent people from the industry. Welcome, Soumya. We're
Thank
very
you so
pleased
much.
to have you here.
Thank
To
you.
start off, can you please give me an introduction of yourself?
Sure. To put it very briefly, I am currently a co-founder of Tap Invest, India's debt investment marketplace. Prior to this, worked with McKinsey for a couple of years as a management consultant.
Nice.
And have been an IIMA grad. I think that's one brand I carry with pride.
Okay.
And been an SRCC alum as well. So that's been a brief about my journey.
Okay. And what about your college, school, before your stint at IIM?
So I graduated from SRCC. Immediately after that, I went for my postgrad. I've done my schooling from my hometown in Yamunanagar. It's a small town in Haryana.
Nice.
I have a family of 5.
Okay. Tell me more about your journey at IIM. What are the key lessons that you've learned, especially when it comes to financial empowerment?
IIMA has been a truly magical 2 years. When I landed on the campus for the initial couple of months, it was complete mad race. Everybody was preparing to get an internship because that's the initial 3 to 4 months. That's where it goes into. Suddenly, everything before that had been a very comfortable life. Immediately, when you land on campus, everything becomes extremely competitive. But that's actually important to get the best out of you. There are a lot of things which I learned, which I gathered, which otherwise, so many limits that I explored, which I didn't know existed. It was
What are
very.
these limits? What are these limits?
One is staying up late for one. I
Okay.
am not somebody who can do all-nighters or can stay up very late, but I think those are the days when we had to do that. In fact, there was a club which, so there, just like all other campuses, you have clubs and societies. So in IIMA, if you have to join these clubs and societies, the form opens from 12 a.m. and it's open till 6 a.m. So basically, you just have the entire night to apply. And if you miss that, then you are not taken into any of the clubs.
Oh.
And when you're done filling up the forms at 6 a.m., they make you run around the campus. There are these hidden boxes kept in different places of the campus where you have to actually go and submit your application and you have to figure that out. And all of that madness happens overnight. So some such limits I didn't know existed. I got to cross those. Overall, it was a very exhilarating journey. The best part was being surrounded with the peers and the kind of people who are way smarter than you and you can learn so much from them. Obviously, the professors are really brilliant. They treat you like an adult, which is again something new, doesn't happen in a lot of schools and colleges. So overall, it was very, very interesting journey. On the financial empowerment front, so I actually landed my first internship with Citi, worked in the markets domain. It was complete mad 2 months of internship. I totally enjoyed that time. All the scenes that you see in movies, like a lot of screens and the phones are ringing and people are just yelling and being mad from 9 a.m. till 3 p.m. It was all real and it was really, really interesting. That's where my fascination for finance and investments began. And I could see that I could spend a career there. Apart from that, obviously, we had a lot of clubs on campus, a lot of activities that used to happen, many competitions organized by multiple companies and the clubs on campus itself. Overall, and obviously the profs that were there, very, very brilliant profs. I think all in all, it was a very interesting journey for me to discover my passion for finance.
Of course, of course. And what about your consultancy stint? And
Yes.
how did that help you build Tap Invest?
I had an offer from Citi, but I wanted to explore something more. I didn't want to commit to a field just yet. So I went with consulting to explore multiple industries and multiple sectors. But somehow I eventually just ended up choosing all the finance related projects even there. So I worked with a lot of banks, a lot of NBFCs, and I realized that we can do better in terms of building a better bank or a better NBFC. solving a lot of user pain points, and especially building something which puts a core focus on a retail investor in India. We actually ourselves started building our own portfolio, started managing it. That's where the whole interest in the space began, and a search for good fixed investment options began, and hence Tap Invest came into being.
Can you tell me more about Tap Invest?
So, Tap Invest is a platform which allows retail investors in India to access various debt investment options in India.
Okay.
Currently we have a few offerings ranging from gold investing, P2P, bonds, asset leasing, invoice discounting. Most of these products are currently actually focused more towards slightly seasoned investors. We are trying to make it more democratized, and playing heavily on bonds as a segment, because that's where we've seen a lot of interest coming in from retail investors. So all in all, we are building a fixed investment stop shop solution for retail investors in India.
Okay. So, okay, from an investing standpoint, we see a lot of focus on equities as such, but not for debt market. So, why do you think that is?
I think equity is relatively simpler to understand.
Correct. Yeah.
There's a lot of content floating around. You can search equities, you'll find so many YouTube videos, so many reels, so many influencers talking about it. It's also very exciting. It gives you that adrenaline rush wherein you invest and you see your stock going up the next day. In fact, very recently we saw what happened just around the dates of elections.
Yeah.
It just tanked and then recovered like anything in a couple of days. So I think that's the exhilaration that comes and the excitement that comes from equity investing, plus how easy it is, especially now with access coming from the apps like Grow or Zerodha. It's become really, really easy to do this. That's where it has penetrated very deeply, and this phenomena also we've seen play out only post-pandemic at such a large scale. Now, our thesis is that there's already a lot of government push. A lot of regulatory bodies are going pro debt investments. Plus, everybody who has explored equity markets now understands the importance of diversification, and they're looking for interesting debt investment options where they can park their money for a fixed duration on a fixed, predictable kind of a return. And that's where we see that this market is set to boom next.
Okay. But there are quite a few challenges an investor, especially a retail investor, would face in the debt market,
Right.
not seen in the equity market as such.
Right.
So, can you maybe state those challenges?
I think the biggest challenge is accessibility itself.
Absolutely, yes.
Debt products, if you see historically, have been heavily invested into by HNIs and some of these large institutional investors. They know
government.
exactly. They know how to diversify their portfolio, how to manage their allocation between debt and equity. In fact, in most cases, their 60 to 70% allocation goes into different types of debt funds. I think accessibility is one very big challenge. In addition to that, the penetration of education or awareness about these products, how to invest, how to take out money, what is the allocation logic to follow, how to save taxes while investing in debt investment products. All of those things are something which a lot of retail investors don't understand. As a result, they end up putting large part of their total portfolio into FDs, which is a very simple to understand product.
Yes.
Again, a debt investment product. But they miss out on a lot of interesting bonds, SGBs, government bonds, treasury bills, your corporate bonds. This is something which has very recently started picking up in India. Now we are seeing a lot of platforms that have come in. Everybody ranging from a Golden Pie to a Wint Wealth to even our platform for that matter. Now we're trying to make these products more accessible. We are trying to create awareness about these products, making it easy for retail investors to find out and invest.
Okay.
In fact, recently you would have seen that. So I would like to mention a couple of very interesting regulatory
changes
that have come in. So SEBI, first of all, has come up with guidelines for OBBP license, which means now there is actually a set guideline which platforms can follow if they want to provide access to listed bonds to retail investors in India, which was earlier missing and everybody was just doing their own thing. In addition to that, now we have a reduced ticket size of the minimum ticket size investment in bonds has now been reduced to as low as 1,000 rupees. So that increases the democratization that we're talking about.
Yes.
And therefore, we are very bullish about this market.
Oh, nice. But also, there are too many complexities when it comes to debt market, as you rightly mentioned. You've got yields, you've got bond yields, you've
Yeah.
got maturity, you've got coupon rate, and things like that. So tell me, what have you all been doing in your company to simplify this to an investor?
So, what we realized is something which investors understand is if I invest X rupees in, let's say, 12 months' time, the Y is the total amount that I'm going to get in return. That is the simplest way after experimenting with different formats we figured people understand.
Okay.
It's very difficult. XIRR is also something which is new to a lot of investors as a concept.
Correct.
And then there comes yield and the coupon rate. It's very confusing for investors. Simple way we try to make them understand is invest X, get Y in 12-month to 18-month period, and that's about it. They can do their percentage calculation, they can do their present value calculation, but end of the day, they understand that if I invest X, I'll get Y.
Okay. Let's give our audience a small lesson. Let's go over the terminologies in the debt market. Let's start off with, what is a bond?
So a bond is nothing but an instrument which either government or a company raises to raise capital against against a fixed monthly EMI payment. So in a very simple sense, it's like a loan which a company
Correct.
raises, but instead of taking it from a bank or an NBFC, they actually raise it from the people. And so if you invest in a bond, you're essentially getting a fixed interest income from a company in the form of monthly payments, or it could be a one-time payment at the end of the tenure. Another analogy I will use here is think of it like when you buy an equity, when you buy a share, you get a stake in the company. When you buy a bond, you get a stake in the overall debt exposure of a company.
Okay. Can we also state more differences between stocks and bonds from a more theory perspective and also from an investor perspective?
So equity is so if you look at the balance sheet of a company, on the liability side there is equity and then there is debt. When you're buying a share, you're essentially getting an ownership in the company to the extent invested by you. When you're buying a bond, you're essentially getting you're creating a fixed liability on the company to pay you XYZ amount over a fixed tenure. The difference between equity and debt is, one is what kind of risk exposure an investor has. Equity is usually more volatile. As you see, the prices keep fluctuating. We don't know what might impact them, something which is intrinsic to the company, something which is an external factor like elections or pandemic, etc. Bonds that way are not so open to fluctuations. Obviously, the listed ones their prices keep changing, but end of the day, you know that you're going to get a fixed return if you start investing today. Practical purposes, I think all your stockbrokers have options to invest in both equity as well as bonds. Whether you go to your Grow or Zerodha, you can buy bonds there, you can buy equity there. Bonds is a much, much bigger market. It's almost twice as big as equities in India.
What do you think from the point of investor when it comes to stocks and debt?
I think even as an investor, the younger you are, the more risk
you can
taking
take, yeah.
you should go for equity because there is a higher chance of upside. But if you want to stabilize your portfolio, if you want predictable income, if you want less risk, then it's better to go for debt. In either case, I think there should be a good mix of two. You should not 100% just invest in equity or 100% invest in debt. You should have a mix.
It's all about asset allocation.
Yeah.
What do you think is the most perfect allocation, say, for a 30-year-old?
For a 30-year-old, I am personally a very high risk person. As you know, I'm a founder. So I think at 30-year-old, you don't have too many liabilities on you. It's okay to experiment and fail and learn. I think a higher allocation towards equity could be explored. But again, I don't want to give a generic advice. I think they should evaluate their unique case. But yeah, I think at 30, you can take more risk.
You still didn't state me the allocation.
You want the percentage?
Yes, let's do the percentage.
If it was me, I would do 80% equity, 20% debt.
Absolutely. Yeah. I'm an 100% equities girl. You can call me a risk taker.
Yeah, I think this is the time.
Yeah, I know. Also, tell me some of the significant factors an investor needs to know before investing in bonds.
I think number one thing to know is the price at which you're getting, because that affects the IRR that you will get. So price is definitely very important. In some cases, I've seen that investors are picky about the liquidation options that they'll have with the
Absolutely,
bond,
yeah.
whether they'll be able to liquidate it after some point or not. I think if that's something which is important for an investor, they should look for that. In most cases, it's not very easy to liquidate bonds, especially if it's not a listed bond. So one should look for that. And then obviously the ticket size of investment, depending on how much funds you want to allocate, you should look at what is the minimum investment ticket size and how much you want to invest into that bond. I think these are the most important factors. Apart from that, obviously tenure, what is the duration left of that bond, that's another factor. I think, yeah, these are the four factors.
And what about the concept of bond deals? Because bond deals also have an impact on the stock market. So, can we talk more on the bond deals, interest rates?
Sure. I think everything originates from how the repo rate changes, right?
Correct.
So if the repo increases, the interest rate everywhere.
As we are talking, I think today morning the RBI just kept the repo rate unchanged.
Yes. Yeah, I think that's the safest way to play it. But everything originates from repo. The way repo rate changes, your loan interest rate, bond interest rate, all of that changes. And then that has an impact on the equity market also. With the higher interest rate, it becomes, in most cases, we've seen that equity performs better. Because higher interest rate essentially means that it's very difficult. It's more expensive to raise debt. If you're finding it easy to raise equity, you'd go for that. And vice versa. So it has a very direct impact on equity market.
One more question to ask you about debt market as such. How do you buy a bond?
So depends on which bond you're trying to buy. If it's an SGB, the primary issue you'll have
Can
to...
we
Okay, SGB is basically a sovereign gold bond.
yeah.
If you want to buy it in the primary issuance, you'll have to go to a bank, tell them once it's out, you buy it from there. If it's a secondary issue, you can buy it over a broker. It's not very easy, but if it's available, you can buy it over a broker. If it's a corporate bond, listed one, again, available with brokers. Unlisted, there are many distributors out there. Unlisted bonds are usually traded offline. So we also do some offline trades. You'll have to find some of these sources. And apart from that, there are treasury bonds, T-bills, government bonds
Yeah.
that you can buy, mostly again through either bank or your broker.
Correct me if I'm wrong, but retail investors can't access corporate bonds. That's right.
Retail investors can access corporate
Okay.
bonds. So obviously all the listed bonds are available. There are a lot of platforms. For example, there's India Bonds, there's Golden Pie, there is Wintwealth. You can access listed bonds there. As a retail investor, you can start investing. I think minimum ticket investment would be anywhere starting $1,000 to $10,000.
Okay.
And there are a lot of unlisted bonds also available. There are platforms like UB, or we also do, and there are some other platforms where you can find unlisted bonds as well. Usually listed bonds, the IXIRA that you'll get is max probably 10 to 11%. So sometimes investors go for unlisted bonds in the search for higher IRR. Obviously comes with higher risk as well, but there you can earn as much as 16 to 17% also.
16 to 17%.
Yeah. There are some of these bonds where you can earn slightly higher, but then come with more risk. And these
Okay.
are mostly unrated bonds.
Okay. Mostly the junk bonds.
These are not the junk bonds, but I would say these are more... usually what happens is the lower the bond
Yeah, the higher
XIRR,
yeah.
these are issued by very large companies, but then there are smaller companies also. Usually startups, and the ones which are, let's say, unicorns, they also raise through bonds, and that's where the IRR gets adjusted to slightly higher rates so that investors are interested to buy.
Okay, let's talk women. How do you think women are taking charge of their finances right now?
So, there are some very interesting insights there. Let's look at how women are conditioned to think about finances or see finances
Yeah.
from the beginning. I think from our early days, we are kind of conditioned in a way to
we're
not worry
depending
about
on a
money.
man?
That is definitely there, but not worry about investing or putting in money to generate returns. We are worried about how to save, how to have enough to protect our downsides, or essentially things like budgeting. So it's I would say it's more of a conservatory approach in which women start from the childhood, as per the conditioning which is around. And that actually reflects in the way they invest as well. So you'd see a lot of women parking money with FDs or with gold,
Gold.
or let's say with in a lot of cases real estate to some extent, very heavily investing in SIPs. When we talk about mutual funds, they don't want to actually keep investing very actively every month. They mostly go for passive ways of investing. In fact, at Tap Invest as well, we see that close to about 98% investors are actually men.
Yeah.
Very
true.
few women investors are exploring these avenues as well. But I think that's how most women are conditioned, and that's how even I have seen a lot of women around me looking at finances. Definitely not very happy about how this is going. I think you and I can do our bit in changing
Yeah.
that.
How
But
do you think we can change that? Because again, it's conditioning. It's years and years of traditions.
there are actually a lot of interesting platforms that have come out, which I know of one which is called Lakshmi, I think. These platforms are actually only focused on women investors. There are very interesting initiatives being undertaken by a lot of companies. Dhan, for example, did this, wherein they actually waived off the entire brokerage fee for women investors for a couple of days. So there are very interesting initiatives being taken by a lot of companies around. I think we can do our bit through that. You are working with a well reputed company. I'm building my own company. I think we can try and and basically roll out these initiatives at such large scale that they show impact for a lot of women investors.
That is true. And that's the plan.
Yeah.
Okay. Tell me more. Again, another question about women. Tell me more about what changes do you see in women participation in the fintech industry, in the finance industry?
I think it's definitely improving. We
Yeah.
see a lot of women taking up leadership roles. Now we have a lot of role models as well. We have seen Arundhati Bhattacharya leading SBI so well for decades. We have seen Radhika Gupta now emerging. There is Vani Kola. There are many such interesting role models that we are seeing, which I believe make a lot of women like us understand and believe that we can also reach there. The road is not so difficult. It's something that is now conquerable, and I think that's a very interesting change that we are seeing around. In addition to that, there are again a lot of initiatives focused on making women come into mainstream finance. For example, Goldman Sachs has this initiative of 10,000 women. There are a couple of initiatives run by a lot of VC firms as well around the world. There was one started by Bloom a couple of years ago called Bloom Lead Tribe. So I'm seeing a lot of acceptability for women, and the doors are getting open. I think now it's up to us to just grab these opportunities and take our stage. And I think we are headed in the right direction with this.
But still a difficult journey.
It's a difficult journey for sure. I think one interesting insight, which again I have here, is most of the women tend to be more academically oriented compared to men. We see that in 10th board results, we see that in 12th board results. In fact, I was in DU. The number of girls to guys ratio there was actually skewed the other way around, which is usually not the case. Since finance is a field which also requires more academically oriented folks, I think we actually have naturally a better chance at it. And it's just now about people like us to hold the door for more people coming in and make them take their chance.
Okay. Okay, let's talk about technology and investments, and especially with the emergence of Robo Advisors. So, what is your take on that?
I think I'm not a big fan of Robo Advisors.
Okay.
Sorry to say that. But my belief is in India, I'm only talking about Indian context. People, when it comes to money, when it comes to investing, they look for trust.
Correct.
And the number one precondition to trust is having a face, having a human touch. And that's sadly something which Robo Advisory has not been able to solve for. Secondly, with Robo Advisory, what happens is once I have actually curated my portfolio, there's very little that I need from that support service on an ongoing basis. Obviously, there is review, there is quarterly updates and rebalancing and all of that, but it's just a one-time charm is what I think. So I'm not a huge fan of Robo Advisory, but that said, I'm very bullish on a lot of these AI algorithms and the quant trading which happens. That's where a lot of real insights come from. And with AI becoming more accessible and more commercialized for masses, I think that's probably going to be a game changer for
Nice.
investors.
All right, last question from the professional side. What is the next step for investors in the debt world? What should they watch out for?
So I think, as I was mentioning, some of these regulatory changes are showing very good tailwinds for the debt space in India. In India today, if you look at the overall bond market, it's roughly about $2.5 trillion in an economy which is $3 trillion. That means it's a very, very sizable market. It has been very relevant. It will continue to be relevant. I think the biggest change that we'll see is it'll become more accessible and open for masses like us. And that's where it'll start becoming more and more interesting.
Nice. Okay, coming to some personal questions. Tell me your personal mantra for life.
For life.
Yeah.
Okay. I am somebody who wants to take risks, learn a lot. I believe in iterating faster and moving on. And I think as somebody who loves to grow, constantly learning and especially learning from your failure is very, very important. And so that's something which I hold close to my heart.
Nice. And also, what personal lessons did you learn as a co-chair of BCIC?
BCIC was a very good 1 year experience. I got to interact with a lot of industry leaders all across Bangalore from different walks of life, different industries. Something interesting that I found was there's a lot of passion that these people carry. In fact, everybody who's at some senior position in an industry carries. If we can do more to build a direct chain of connect between a lot of bureaucrats and policymakers and these industry owners, that can go a long way in shaping the way Bangalore emerges or Karnataka emerges and eventually how India emerges. I think there's a lot that can be done in building this connectivity more.
Okay. And how important is providing financial literacy is to you?
I think
How passionate are you of this cause?
I personally am very passionate about the cause. There are a bunch of initiatives I've been doing since my college days in this direction. We started this cell called Vittashala back during my undergrad days at SRCC. It was actually inaugurated by the then finance minister Arun Jaitley, and we were actually fortunate to have gained the kind of success that we gained with that initiative. We went around various localities in and around Delhi, educating a lot of young kids and their families. In fact, you'd be surprised to know there are so many government policies which have come out for the girl child. For example, there's one called Samriddhi
Sukanya Samriddhi Yojana.
Sukanya Samriddhi Yojana and many like this, which a lot of people don't know about. And it's surprising the way government is trying to help, but there's just no awareness. So that was our motive, and I think it's a very interesting, noble cause. We just have to crack how to distribute this at a large scale, but I think that's a very interesting problem to solve, but very, very close to my heart and very
For sure.
core area of interest for me.
So tell me, how do you spend an off day? What do you do?
So Sundays are usually my off days, and usually I spend Sundays being alone by myself. I love to have zero interaction possible with any other human being. I'm usually either sitting alone with a book and a pen, writing something, or I'm just.
Do you journal?
I do journal, but that I do on a regular basis, not specifically on my off days. Off days are mostly for me to just sit, relax, unwind, think, and just read, just be alone.
Okay. Now, being a co-founder, I'm sure your life is extremely busy.
Yeah.
So tell me, how do you make time for your family?
It's not easy. The good thing is that I've started up with my husband, so that one element is sorted. I think we get to spend a lot of time together. But for example, I get to talk to my parents not that often, probably 2 or 3 times a week. Same goes with my siblings. But I think good thing is that they understand, and that is very, very helpful. And they know that if they'll call me, I'll probably not pick in the first go, but I'll call them back for sure. So I think that kind of understanding helps. It's important to set that with the family.
Nice. So let's move on to rapid fire questions.
Okay.
Do you like rapid fire questions?
Sure.
Okay. I'm not sure if it's going to be a very fast rapid fire question. If you could have dinner with one person, dead or alive, who would you choose?
It's not gonna be fast. It'll be Elon Musk. He's my
Okay.
favorite entrepreneur. I know I'm gonna attract probably a lot of flack for this, but I think he's
That's all right.
really bold and takes. He has his visions. I don't think which seem very insane, but yeah, him.
Okay. All-nighters or early mornings?
Early morning.
Describe a usual day for you in 3 words.
It's hectic, exhilarating, and hard work.
True. Delhi or Bangalore?
Bangalore.
Teamwork or going solo?
Teamwork.
What is your favorite dish?
That's a very difficult question. Do I have
Okay.
to say one?
A cuisine?
Okay. Cuisine, Mexican.
Mexican. Nice. Remote work or in-office setting?
In office.
Advisor or self-research in stock market investing?
Self. I will
Okay.
do my own research.
It was great having you here, Soumya. I too learned a lot about the debt market, and I work as a stock market analyst. So it was nice to have this discussion with you. So one last question: what advice would you give to, say, someone who are struggling to manage their finances?
So first of all, thanks a lot for hosting me today. It was a lovely discussion indeed. It's very rare to find very like-minded people, and I think I had that wavelength with you. Now on to the advice. I think advisory business is really tricky, but I'll still take a step here and say that people who are struggling with their finances start learning more. I think
Correct,
learning is the
yeah.
best way to get to the bottom of everything. Start with simple YouTube videos. Talk to people around who know, who understand, who you think do well with their finances, and then just get started. I think it's just the learning of making mistakes and learning from it. So
Correct.
just get started. Start with some basic knowledge and learn with experience.
That's true. Anyway, that's a wrap. And thank you to our audience for joining us today. And if you do like this video, please subscribe to us.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.